Now, let's not ponder on whatever it is today, okay? Let's just go straight to the point. Straight to the point what we'll be talking about in the financial markets and how we will be discussing it, which is basically how to build a profitable trading strategy. How to build a profitable trading strategy. Okay. Now, in this session, okay, in this session, we'll go through what is a trading strategy, components of a trading strategy, market ideology, choosing a methodology, defining your risk, backtesting your approach, your trading rules. Then we'll conclude on everything about a trading strategy. So let's dive right into it. What is a trading strategy? Okay. A trading strategy is a systematic methodology used for buying and selling in the global financial markets. Let's make that more clear. A systematic methodology. What it means, it's a certain approach known to you alone that you will use to take profits or make profits from the global financial markets whenever you are either buying or selling. A trading strategy is based on predefined rules and criteria used when trading or when making trading decisions. Okay, it's based on predefined. You already have those rules on ground and criteria used when trading or when making a trading decision. A trading strategy may be simple or complex and involve consideration of a certain investment style. Okay, now what a trading strategy is, or what it basically is about, is a method you use to trade based on the type of risk appetite you have, the amount of money you want to make from the market, how calm you are with making such amount of money, how calm you are with losing a certain amount of money. These are set of rules that you already have on ground. Okay, these rules are there already. These rules are there already, and you just need to follow them, stick to them. It can either be simple rules or complex rules, and it has to understand your capital. Your strategy has to understand your capital. You have to understand your strategy and the capital, because it's all based on your investment style, your trading style. How much are you putting in will determine the type of strategy you should be using. Should you be aggressive? Should you be conservative? These are the little things that your strategy consists of. Components of a trading strategy, which is what we'll be talking about. Hmm? Market ideology. Before we go to this, let me give a life example of a trading strategy. If we all go to the shopping mall, okay, possibly, I don't want to mention name of shopping malls, but I will mention names, okay, like ShopRite, Spar, uh, Adide, Prince Ibano. If you all go to shopping malls, just drop a yes in the chat box. Or if you go to the market, okay, if you go to the market, drop a yes. Or you've been to the markets before, drop a yes in the chat box. If you've been to the markets before, drop a yes in the chat box. You've been to the markets before, even if it's once, you followed somebody down there, drop a yes in the chat box. Now, before you go to the market, what do? You already have a list of things you want to purchase, right? You already have a list of things you want to purchase. And in your mind, you have somebody you want to buy it from, that your customer you like to buy such things from, right? That is just a trading strategy. In this scenario, it is a buying strategy because it's a real life situation in the market. Okay, you already have a strategy and approach you'll be taking from your house to the market and not doing beyond or below that approach. That's just what this trading strategy is in real life situations. Now, components of a trading strategy, the market ideology. Before you create your own trading strategy, you must develop an idea of how the market works. You must develop, you must develop an idea of how the market works. You need to understand how the market works. You need to understand if the market you'll be trading, does it buy always? or does it sell always? If it buys always, you want to have that trading strategy that only looks for buying opportunities. If it sells always, you want to have that trading strategy that only sells or looks for selling opportunity for you always in the financial markets. That's what you want to do. Having a market ideology, understanding how that financial instrument, understanding how the market works. Most importantly, you need to answer this question. Why do I think I can make money from this market? See, once you can answer this question, that is it. Like, you just hit the jackpot. You basically just hit the jackpot. Because being able to understand why you can make money from this certain financial instruments is the key to being profitable. Is the key to making that strategy become more profitable, not just profitable alone, more profitable. You need to form your market ideology by reading widely, understanding which markets to trade, understanding what to do, reading about technical and fundamental analysis. To form your market ideology, you need to read wide and far. You need to understand every single detail about that financial instrument you will be trading. Okay, you need to understand every single detail about that financial instrument you'll be trading. You have to understand the technical perspective, you have to understand the fundamental perspective, and also avoid get rich quick scheme. Okay, avoid get rich quick scheme. Don't have that methodology or that idea of someone said this is what he's trading, that's why he's making money. You want to trade it also. See, chances of when you trade it and you will lose money is very, very high. Chances of you trading it and losing money is very, very high, because you don't know what that person saw before the person chose that financial instrument. You don't know what the person saw, or you don't know what the person have seen before you choose the financial instrument, and you now want to just choose the financial instrument with the person because of he said he's profitable whenever he trades it. Okay, so avoid such claims. I only trade ERUSD, AUDUSD, and KJPY. You want to trade the same, but you don't know what I see. My reasons for trading those financial instruments. That's how people lose money in the financial markets. Still under the components of a trading strategy, choosing a methodology. Now, remember, we've talked about having the market ideology, understanding the market. Now, choosing a methodology. The first step, the very first step to creating your own profitable forex strategy is to pick a trading methodology. Now, a trading methodology how will come from your idea of the market. By that, I basically mean, do you want to trade with the trend or you want to trade counter trend? Trading with the trend means you understand the market is always going up. You only be looking for buying opportunities. Trading with the trend means you understand that the market is always going down. You'll be looking for selling opportunities. Counter trend trading basically means when the market goes up, it doesn't go up that much. But when it corrects, that's when it comes down, it goes down a lot. You want to trade it down, you don't want to trade it up, even if it's an uptrend. Vice versa, also for a downtrend. Now, see, a winning trading strategy should incredibly be detailed. Should be incredibly detailed. See, it must be detailed to the core that you understand what the market has to offer you. Okay, it must be very, very detailed that you understand what are the chances of this trade playing out. See, every possible outcome must be thought out and accounted for in order to succeed. Every possible outcome must be thought about. Like, you must already have an idea. If this doesn't happen, then that will happen. If that doesn't happen, then this will happen. That's what your trading strategy should be about. Your trading strategy shouldn't be one-sided. Shouldn't be one-sided. It has to be balanced. It has to be balanced. Oftentimes, once a trader places a trade, and their plans and objective goes out the window. Once a trader places a trade Their plans and objective goes out the window. Once you place that trade, you forget every single thing in your plan because you're in profit. You forget you are supposed to take partials. You forget you are supposed to take profits in a certain area. You forget you are supposed to leave this market at this certain time because of you are in profit. Don't be that type of person. See, as the saying goes, luck favors the prepared. Luck favors the prepared. And I'll show you something quite amazing on the chart right now. Luck favors the prepared. So take the time to develop your strategy before making that first live trade. Let me show you something on the chart before we continue about luck and how it favors only those that are prepared. Let me show you. I took a trade on ERUSD during FOMC. Can you see my screen? Can you see my charts? During FOMC, I remember it was during FOMC. Let me look for that FOMC day right here. Yes, this was it right here. Okay, this was FOMC day right here. Now let me just reset my chart so you don't see all my markouts and all. It's quite dirty. Okay, yeah. So let me show you how I was able to catch this sell on FOMC. After I caught this sell, I am still in this sell right here. Like I'm still in this current sell. I got in at the tip of this week right here. I wish I can. Let me see if I took a screenshot of it. I'm coming. Let me see if I took a screenshot of it. I would gladly share it with you guys. Let me quickly look for the screenshot so you can see that making money from the market is one of the easiest thing in this world. One of the easiest things in this world. One of the easiest things in this world. It's very, very easy. Like when I got the entry itself, I'll try as much as possible to go back and then look for it. I'm trying to check through my archive and show you that it's very, very easy. Very, very easy. Very, very, very easy. Or let me just tag it on my phone, then show you on the screen. Okay. Let me quickly tag it on my phone, then show you on the screen. Okay. I think I took a screenshot. I remember I took a screenshot. Okay, yeah, found it. I found AUD USD on. Let me just tag it. Let me just tag it. Show you message. Let me look for show you message. Go to message. Yeah. Okay, I found it. So I tagged it already. Let me just quickly save the image on my PC and show you. Now I'll show you every single thing. I'm not trying to brain fool you or nothing, but I'm showing you how, if you have a very, very good strategy, how it is going to help you. You will know these things beforehand. That's just the truth. That's just the truth. You know it beforehand. You see it happening. Like you will capitalize on it because of your understanding. That is what is supposed to happen in the financial markets. I'll show you proofs also. I took it on AUD USD and ER USD. I took it on AUD USD and ER USD. I'll show you every single thing. Well, okay, yeah. Now let me explain the charts on its own. Let me explain the charts on its own now. Now, how was I able to know that FOMC would go up before coming down? It was simple. Okay, it was very, very simple. One of the simplest things that happened in the markets. It was one of the simplest things that happened in the market. Okay, so how did I know FOMC would go up before coming down? Let me just mark out that candle. I can't really point out the day on the daily time frame, so just look at me. Okay, yes, this was it right here. So how did I know FOMC would go up before coming down? Okay, I knew FOMC would go up before coming down because of one thing, just one single thing. Okay, just one single thing. This was where the daily market structure broke. This was where daily market structure broke. And like we had this impulse, correction, the impulse. This was my breaker block. Okay, this was my breaker block. Right there. This was my breaker block. So I knew price still had a business up. We broke structure. We need to retest before continuing down. We need to retest before continuing down. Okay, we needed to retest before continuing. And the funny thing was, I caught the sell. I caught the sell and I caught the buy also. I'll show you proofs also. Okay, now let's go to the 4-hour time frame. The breaker block I was watching on the daily time frame aligned with the breaker block on the 4-hour time frame. So what I did was basically ignore the daily time frame on. I don't know, my chart is actually okay. Yeah, I ignored the 4-hour on. I ignored the daily one and focused on the 4-hour on because I felt it would be more precise to use the 4-hour on. Then I just understood market structure is bearish. All I did was understand that there was liquidity above here. There was liquidity above right here. And I knew price had a business there, up there. I knew price had business up here, like reasons for price to go higher. I knew there was a reason for price to go higher. And price just what? Went up to where? The breaker block itself. And what? Rejected. Now let me show you proofs. Let me share an image. How can I share an image? God. Trying to look for a method to share an image. Or let me just share. Okay, let me just share something. Let me just load it on my screen and share my screen with you guys. So you see how I was able. So after I caught this sell, okay, let me just explain something real quick. After I caught this sell, I didn't take a screenshot of the sell, but I took a screenshot of this one because within this week there was an order block on a very small time frame. If I mention the time frame, most people say, "Wow." Okay, I'm not trying to put pressure on anybody, but I'm just trying to let you know that there was an order block on the 1 minute, 3 minutes time frame here. So I just took the trade off the order block. Let me show you my screen now. You see, now the same thing happened on what's it called? The same thing happened on what's it called? On AUD USD. So let me just share. Disable screen sharing. Let me share that screen. So the same thing happened on AUD USD. So I just immediately blindly took it. Okay, see EUR USD right here. You see how precise it was. Where I told you I got the entry, and I got 2 entries. Although I took partials immediately, I took partials after the bearish candle formed. I was not trying to take any crazy risk at all. Then look at AUD USD. See where I got my entry from on AUD USD. You see 2 entries, and it's still running till now. Like, these are just the amazing things you understand once you master your strategy. Once you see, you are going to do it easily, effortlessly. Okay, you're going to do it easily without stress at all. And it happens every time. I said something today. I will expect EUR/USD to. I said something this early morning. Oh, I don't know. It's not. Wow, it's not loading here. Wow. It's not loading here. Wow. Okay. I have one indicator I used to know market session. So I said I will expect EUR/USD to go up, take this high, come into this order block before we go down further. That's if I don't see it happen this week. I've not placed any trade at all this week. I just have the ones I have running from last week. And this is just the art of mastering your strategy. Okay? So like I said, you need to understand every possible outcome. I knew if I missed FOMC, I would get a re-entry a day after FOMC. And this is just the little things that matter in your strategy. So the next one, component of a trading strategy. Backtest your approach. I did not know how to do this thing by just reading it at once and knowing that I understood it. No, not at all. I understood these things will happen from multiple times of practice. With my rules written down, I backtested the strategy. If you have a discretionary trading strategy, backtesting can be an arduous process. And yes, I have a discretionary trading strategy. My backtesting process was not easy. You need to replay the market price action and record your trades manually. That was what I did. If you have a mechanical trading strategy and a coding breakdown, you can speed up this stage. But nothing beats a do-it-yourself method. Nothing beats a do-it-yourself method. Do your backtesting yourself. Don't let a machine do it for you. A machine will pick what you tell it to pick. You will miss out a few details that you would basically see with your eyes. Nothing less. Look through the trades one by one. is a great way to develop your market instinct. It will help you develop your anticipatory skills in the market. Doing so can help you think of ways to improve your trading strategy. Just doing it yourself will help you think of ways. Exactly, manual testing. Manual testing will help you think of ways of doing it yourself. Let me show you my own journal, okay? Just my own journal of how far I've been doing my back testing. I just backtest only the financial instruments I trade, okay, which is DXY with dollar, ERUSD, and the like, and CAD I don't do any other stuff. And I also make it very, very detailed. Let me show you on my screen. Make it detailed. Don't just mark out your chart and say you've backtested like that. No, 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 not at all. Not at all. Let me share the media viewer. Can you see my screen? Can you see my screen? Can you see my screen? Can you see what I'm sharing you, or what I shared on my screen? Can you see it? Let's be fast. Yes or no? Can we all see it? Yes or no? Can you all see my screen? Okay, great. Now see what I wrote. I said first trade in 2018 December. Okay, price rated the highs of 2018 December. I was backtesting 2019. Okay, ran stops, then broke market structure. Traded back into the breaker block before declining, and that was what I saw on the charts. Let me show you more. Okay, second trade, price declined to discount, price traded higher above equilibrium into premium. Like, I just made it very, very detailed that even if I am to publish a book about this, it's going to be self-explanatory. They will not need me to come and start explaining. Like, multiple times I went back to see these things happen. I went back, saw these things happen multiple times, went back, saw it happen multiple times. And yes, when you are backtesting, it is very, very normal to lose trades when you are backtesting. Very, very normal to lose trades when you're backtesting. Like, very, very normal to lose trade. I lose trade when I backtest. Backtesting is not meant for you to see all the trade you missed, like you did not profit from. Backtesting is to show you how to better your anticipatory skills. That was how I knew FOMC would do that. Okay. How do I pick the pairs I trade? I just decided to choose 3 pairs. I did not go and do any, well, I did the research, I won't lie. I went to look for pairs that deliver a certain amount of pips that I'm comfortable with. I went to look for pairs that have very, very high volatility. That's CAD was what, like, it moves like crazy. Okay, it moves a lot. So I chose CAD high volatility, high momentum, fast. It's like fast and furious CAD. Then AUDUSD quite slow but delivers when it wants to deliver. It will deliver maximum pips. ERUSD is for my daily 30 to 50 pips. That's just the method I used in choosing. A breaker block is just break and retest. Break and retest of market structure. That's what a breaker. That's the simplest way to explain. If I try going into detail, you're going to get confused. Just understand a breaker block is when price breaks an area of structure, retest, then continues to go higher. So that's just the idea of backtesting. You need to backtest your approach. Now, after backtesting your approach, remember, the strategy you are using is somebody that created it. Okay, you want to fine-tune it to your own taste. You have to make your own rules also. At this stage, your trading strategy is ready. You've fine-tuned it to what you like. You've ignored you've cherry-picked what you like. Okay, it's all about cherry-picking. You've cherry-picked what suits you. Okay, you see, no matter how good a trading strategy is for someone, you can't like everything that is inside. You have to edit something to your taste. It's either you edit it and it becomes better, or you edit it and it becomes worse. That's the logic behind it. So at this stage, your trading strategy is ready. You've been able to memorize your trading rules. You know what you're looking for. Maybe you're looking for BMS, SMS, RTO. Then your pips will deliver. Or you're looking for COT data. Then after that, you check open interest. After that, you want to see price in premium or discount, and it delivers. See, once you've memorized all of that, but you still need to write it down. You still need to write it down. You need to make your trading plan, your trading strategy robust, well detailed, that If you give it to a 5-year-old, they understand what you're looking for in the markets to ensure discipline and consistency. If you don't see this, you won't trade. If I don't see a few things in the market, I won't trade. That's me. Most times I trade New York session because I feel that's where most of my profits come from. That's where my consistency comes from. That's where I feel more disciplined. I can trade London session, yes, but I feel comfortable with New York because it delivers a huge amount of pips for me. It's where I get more precision with the method I trade. You see, once you understand these things, you'll find it useful. You'll find it useful because it's going to provide records of your trading strategy before and after. Always keep your before and after. It's very, very don't keep it on the group. Have a channel you created yourself, or whether you want to be printing it out and be stapling it, it's great. That's for physical reference. It's very, very amazing. Before and after, before and after. It helps you build your confidence, it helps you build your discipline, it helps you understand you can attain consistency. It helps you understand you can attain consistency. And that's just the whole idea behind it. Okay, so before we conclude, okay, let me just read out the conclusion. Then I will do something before we go. Conclusion: to become successful, you must focus on trading effectively, not on the profit or loss. This is the mistake everybody makes. I'll be truthful to you. You see, yes, everybody's trading to make profits. We are all trading to make profits, undisputed. But you must focus on trading effectively. Like, you must focus on that mastery, being profitable, being professional with your approach. You need to do your research, then act. Action. Action is not by sharing analysis, not by this, it's not by waiting for validation. I see a lot of traders on the group. I see a lot of traders in the group, they are waiting for validation, for somebody to say, yes, you are correct. If the group is disabled today, will you still have that person to validate you? That's one big question. Well, the group is there for sharing ideas and all, yes, but for you to be able to do the markets yourself, you need to reduce the way you ask for validation. Once you use this step-by-step approach I've mentioned here, see, and every single tools I've hinted, every nugget I've dropped in this session, you'll be able to build a profitable strategy. And you will gain consistency profitably over time. That's just the truth. So before we go, I want to show you my own trading strategy. Okay, I'll show you how I approach my own trading strategy, and I'll be sharing my trading view chart in this instance. Okay, I'll be sharing my trading view chart in this instance. Let me go to Windows. Let's go to Chrome tab, and yeah, okay, great. So I believe we can all see my screen, right? I believe we can all see my screen, right? That's UK 100 right there on my screen. Can you see my screen, please? Wow. My own trading strategy, I'll be candid with you. My own trading strategy, it's wow. I would say very, very complex. Okay, but I cherry picked. Okay, I cherry picked. And there's it. I dropped different PDFs on the group. Check the files folder. You will see different PDFs that I dropped on the group. If you want to trade basic pure price action, yes, you can go. If it's smart money concept, also there is PDFs there on the group that will help you. So let's quickly see my trading strategy. Okay, I already have my charts marked out. So this is from last week charts. Don't mind it being rough or anything. Okay, that's just the things the many things I do on my charts. That's why. Okay, so my trading approach or my trading strategy is, first off, I want to understand price from the higher time frame perspective. That's my approach. Me understanding price from the higher time frame perspective. So after I understand price from the higher time frame perspective, which is the monthly, weekly, okay, monthly and weekly majorly. What I now do is I build my intraday bias, intraday trading bias. I build my intraday trading bias. How I will approach the market, how I'll capitalize on the market on the daily time frame. Okay, After building my intraday bias on the 4-hour time frame, I want to see potential PDRAs. Okay, potential PDRAs just means I want to see significant area price needs to trade to before I can capitalize on a single trade. Okay, so like last week, I was looking at this breaker block right here. Price needed to react, then we go up. I took the trade and I made 3% of my trading account, 3.2%. Although I was watching price to go higher this way, but price literally went higher during FOMC, and I felt the fact that I missed. Okay, on my trading view account, I didn't mark out the breaker block, but I capitalized on it. So this was like enough reason for me to like change my bias that price needed not to go up again any further, but it needs to now start going down to where I said it was going to go, which is the sell side liquidity. Okay, I deal with liquidity, order blocks, breaker blocks, which is the sell side liquidity. Okay, now I expect even if it doesn't come up for me to get my entry, all I expect is it has to shall go down to this space. If it goes down to this area, then my higher time frame perspective still tells me that we are still going down further. So I'll just be looking for RTUs for further entry. So this entry was based on I think 5 minutes time frame. The buy entry I had here was based on a 5 minutes time frame. Let me check properly. I think it was a 5 minutes. I remember. I really don't forget things that much. But I remember it was a 5 minutes time frame. Let's check to confirm together. Yeah, I said it was a 5 minutes. I remember. Yeah, I remembered. Like we had this break a market structure, price went up, came back to this order block here. This was the candle I considered as my OB because this was like an inside bar. I wasn't considering this, that I considered this as my OB, but I got in too early. Okay, I got in very, very early because I didn't want to miss out, and spread also. I didn't want to miss out, so I just like got in here. I need to react here because I had a line drawn there already, and we just like we delivered immediately. We delivered the next morning to be precise. When it got here, I took partials, then I logged in profit here. Then the next morning, just delivered right there, and I was like, wow, amazing stuff. So that's how my trading strategy is. Nothing complex. Well, I like it that way, and interesting. It comes with precision also. So that's basically the whole idea behind my trading approach. Yeah. So in all you do, in all you do in the financial markets, make sure it all leads to you making a lot of profits. Okay. Um, I only use the 15 minutes and the 1 hour majorly to enter my trades. If I want more precision, I use the 5 minutes, 3 minutes, and oh, okay. Okay. So I'm seeing I use the 5 minutes, 15 minutes, 3 minutes, 1 minute. The better I want to, okay, it's just like the more I want to brag to my mates, okay, my fellow traders, the more I want to brag to my fellow traders about how precise, how precise, how precise. The more I want to brag to my fellow traders about how precise I am with the markets, the more I go down to a lower time frame to get my entries. Okay, it's just something like a bragging right. So it's nothing interesting, just me doing my thing. So yes, we've come down to the end of today's webinar. We've come down to the end of today's webinar, and thank you for joining me on today's webinar. Thank you very much. We have a webinar for Thursday. It's an Ask Me Anything um you can ask me anything you want on Thursday on the webinar. And yes, that's basically it. So good luck and good trading.